Good afternoon, everybody. Welcome to the TraderMerlin show. It is your Friday edition. It is the weekend edition, which typically means I have a glass of something in my hand. Alas, not this Friday. Today, I'm not going to be having a drink with you. I'll air cheers you, but I got a bunch of work to do, and I don't want to have my wits about me, make sure I don't make any mistakes on some of the content that I'm building. So, I'll cheers you probably in about 4 hours when I finish all the stuff I need to get done. Anyway, happy Friday. I apologize for missing yesterday's show. For those that did show up and came to my presentation in San Francisco, thank you very much. Hope you enjoyed it. Hope you learned something. I think the fun part was the discussions that followed afterwards about kind of the status of crypto, digital assets, regulation, opportunity, and I'm seeing more and more people open up to the idea of digital assets becoming more mainstream and a part of our society. So that was kind of refreshing. I did go to a couple other presentations, which I have to say, were okay. I think I did a damn good job. So anyway, thank you guys who showed up for that one. It was fun. And now thank you for the Money Show for inviting me up there. Hopefully I will be out to do the Orlando version or the Las Vegas one for them in the near future, because it's always fun to go to these presentations. When I went there, they had a panel discussion on, everybody giving their thoughts on 3 different investments, which I always find interesting as to, why they're promoting it. Remember, my feeling is if someone's telling you that they like a company or like a stock, typically it means that they're already in it and already long. So always keep that as in the back of your head. All right. So you might have seen the graphic for today. Trading week wrap-up show 913. Yowzers. I wanted a picture that showed central bankers arguing and finger-pointing. And, of course, no one in here, this picture is Jerome Powell, which was nice. It should have been Jerome Powell in one of them, but no, this AI didn't do it. And the reason for that is really what we've been talking about for months now, which is the prospects for fewer rate cuts this year. Of course, Bill Addis was on last week. He thinks we might actually have one rate increase. And interestingly enough, there were a couple of board members today who made that comment as well, saying, hey, we don't really think rate cuts are on the table. It might actually need to go higher in order to fight this inflation, which is something that we've been discussing. Ultimately, when it comes down to it, at the end of the day, whether they raise rates or lower rates or keep them exactly the same, doesn't really make much of a difference if we don't have a plan in place. So, you look at what the comments were today, the trend of rate talk, which has been 8 cuts, 5 cuts, 3 cuts. I'm thinking 1 cut and might not get any cuts. I'm curious what you guys think. Type in a chat. And unfortunately, I didn't turn on the ultra low latency, so there's going to be a lag. But I'm curious to know what you guys think about the remainder of this year. I know we've got a long way to go. We're only in month 5 here. But as this picture's starting to look a little bit more sour with regards to rate cuts and possibly even some rate increases, how are you positioning yourselves? Like what's your game plan for, let's say, the next 6 months? Right? You don't have to write a whole paragraph, but it should be a couple sentences maybe on how you're going to approach this one. What's your tactic going to be if, in fact, we don't get these highly anticipated rate cuts that the market has had priced in already? It's my belief that by pricing in 8 rate cuts, that would have been a sign of an incredibly juiced market, right? A market that's just going to get gasoline poured on it and just flare up, just big boom. But then it went to 5, and now we're at 3. I haven't looked today to see what the ultimate number is. But as that prospect of rate cuts diminishes, to me that puts more bearish pressure on the market. And I know that I am, many people say, oh, you're doom and gloom. I think Liz said that on Wednesday's show. I'm not doom and gloom. It's, we've had a market that's been up for so long. We've had some nice small little pullbacks, but I think there needs to be a little bit more damage to our market because we're not getting that capital infusion that the Fed would give us by giving us rate cuts. So here is the rate cut calendar, or at least the prospect. So our next meeting in June, no big deal. I'm pretty sure everybody's going to be in this same camp at 96.5% of no changes. But what about December? So it didn't update for today's action, but right now what it's priced in is, right now there's a 35% chance of 2 rate cuts, 35% chance of 1 rate cut. So that is, let me see, is it getting any better or worse? It actually is getting higher probability of 1 rate cut. And you can see here that the prospects for it staying the same is right around 12.7%. Now, what we're not seeing, and I think that this is interesting, is we're not seeing anybody who is forecasting yet a rate increase. Now, I see John here says 1 rate increase. John G says 1 to none as far as cuts go. So most of you thinking cuts. I do too. I think I can't emphasize this enough. It's an election year, and you have to put pressure on the Fed to help out that incumbent party. Otherwise, you're not going to get reelected on the Fed, on the board of governors, whatever, and might be removed. So you want to appease the powers that be. Most likely we'll get one rate cut, which is why I took that double or nothing bet with Bill Addis. He's going to owe me a 6-pack after this one. Looking real good. So, yeah, it's interesting. Two things. Number one, if we look at today's market, I've been totally slammed yesterday. I was traveling all day yesterday, which actually saved me. Let me show you a funny moment. So I really wanted to go long crude oil. And we drew out this orange box on Wednesday's show, and I said, look, if we pop up above that one, there's your long opportunity. I was flying yesterday and in San Francisco, traveling, getting to my presentation, and doing the whole exhibit hall thing. Notice yesterday, it actually gave the buy opportunity. The buy opportunity was triggered yesterday. I should have been long, and if I was sitting here home, I would have been long. I was saved by my travel because look what happened today. We gapped up higher with a small little gain on the crude oil futures, and then just gave it all back. We had a 1.35% slide today, which certainly would have hurt me in my UCO because I was going to do a double long position here. And check out what UCO did. I was saved by just opportunity and being on an airplane. Yeah, that was a pretty significant down day for UCO. And anyway, save there. The other one that I wanted to look at, and we'll talk about these markets overall, today, as I was building out more content, I was just really, really close to just going short on the S&P simply because we have that line drawn, or I have that red line drawn at 52.63.5. And we came up right to it today. The intraday high on the S&P is 52.64. Now, for me, it's really all about time. When did these things happen? Now, you can see that in the middle of that trading day, 6:45, not in the middle of the trading, but in the early part of the trading day, right in the morning, we opened up right into that high and then proceeded to sell off from that point. And unfortunately, I did not go short. I do believe we're going to start to see things slow down a little bit. I don't think a crash by any means, but I do think you'll see it slow down just a little bit, taking some profit from this really big rally we've had going back to these lows on April 19th. To where we are today, markets have rallied about 5.6% for the S&P. So that's my belief. I think that this talk from these central bankers, which is the basis for this picture here, and kind of a little more pessimism with regards to rates, is going to start to make the markets a little bit nervous. That, the white knight's not there to save us with regards to lower rates. So just my 2 cents. Who knows how it all is going to work out. Let's see. John says, sell some negative delta spreads to balance out my other positions in the SPX. Weekly closes below 20-period simple moving average. I'll go to cash in the 401k. Nice. While I don't know if that's the perfect plan, you have your rules in place, and if it gets below that 20 period, I'm out. Call it a day. Great. And if we look at this overall market, I have on here, which moving average? It looks shorter term. I think this might be, that's the 50. Let's go to a 20 just so I can kind of show visually what you're talking about. There's your 20-period moving average, right? And we're right now considerably higher than that moving average, which tells us we've had a really big extension over the past couple weeks, which, of course, you can see on the chart. So by using that as your backstop, I think that's probably a good idea. If we stay sideways for the next couple days, this moving average will start to curl back up and may actually come back into, let me go back to the origin of this last move. There you go. And we'll do a little snap mode. Here for me is kind of my shorter term demand zone. That demand zone for those listening to the podcast is between 51.88 and 52.13. Very close to where we're at. It's nothing really powerful, but it was just a rally-based rally. We had a little bit of a pause right there and then accelerated out of it. So, if we stay up above that, then all thing would be fine. And most likely this 20-period moving average, which is now trending back up. Are you want to do on the weekly? Oh, you did say, you said some moving. Okay, let me throw the weekly. And that's a huge difference in style as well. So I personally would do the daily just because I am shorter term, a little bit more sensitive to market fluctuations. 1 second here. I have 1 second. Okay, sorry, I had to send that email, send a message out there. Gotta love when I have my Teams open, so I usually close that thing out. So I'm okay with your 20-period moving average on the weekly, but again, your stop loss is going to be probably a bit further down than it would be on that daily. Okay, let me go back to that daily time frame there. So mine would be out a little bit sooner than that. I like that one as well. I am predominantly in cash. I have a whole bunch of puts sold, as you guys know. I showed you, I think, last week or week before. I've got Rivian. I'm long Rivian, and I have sold Rivian calls. We'll see if that gets taken away. The ones that I have just straight outright sold puts on, hoping for lower. What was that? Meta, Starbucks, Silver, Cleveland Cliffs, and I'm out of my boil. So all my stuff's going to expire, most likely worthless, which is great. I'll collect all that premium. I'm a little bit bummed because some of these things that we've talked about, like Starbucks in particular, I really felt like Starbucks was going to have a nice big move to the upside, and I didn't sell as much as I wanted to. I almost doubled down as it continued to slide here, and I didn't because I don't know. And unfortunately, now I'm having seller's remorse. I wish I would have sold a lot more and just bought directionally, because I do think Starbucks is going to have a rebound from that bad earnings announcement and start to fill this gap. Notice the origin of this gap goes back to almost $88. Well, we're currently at 76. $12 per share would be a pretty nice rate of return for Starbucks. And I think changing your business model a little bit, the price of coffee really starting to fall quickly. Here's the price of coffee. You had a really sharp decline there in coffee's price. That'll impact their next quarter profit for sure. What else do I got here? Next week, PPI and CPI number might be very telling in the future. Yeah, so this is very different what's happening next week. Of course, we're kind of jumping the gun here, but that's okay, Les. Thank you for that. Normally what we get on an inflationary announcement week, which is usually a CPI number, let's say on a Tuesday, and then 2 days later, they'll do the PPI. And it's typically consumer price index first, and then producer price index. For some reason, and I don't know why, next week it's all reverse. So on Tuesday, we have the producer price index coming out first. And if I'm not mistaken, the numbers are always so wishy-washy in my head. I believe the expectations are right now that we're going to stay at 0.4% for PPI and CPI, which comes out on Wednesday. They're expecting that to go from 0.7 to drop down to 0.4. Now, you got to be careful with that because, again, they're just lowering the bar. For those that think that when we get that 0.4 number next week on CPI, oh, wow, this is great. Remember, that was our expectation last month, and we came out at 0.7. So, that's going to be a huge one. Those numbers are reversed, but it's going to be a very big week. I will show you the economic calendar here as we wrap up the show a little bit later on. But for now, pretty good. Does Starbucks buy a premium coffee bean that is not affected by its overall drop in the price of coffee? That I don't know, Mike. I don't know that at all. I don't know their inner operations. My gut feeling, just if I were to be running that business, is if I'm Starbucks, I'm hedging using those coffee futures. And what probably happened is they bought a bunch of futures to lock in the price of coffee, and then price shot up. And so that actually should have helped them. Now, what I'm not sure is how they're actually conducting their futures hedging business. Because if they were buying futures back here when coffee was up at $2.39, now all of a sudden it's down at $200, then they're going to take a loss on their coffee futures business, not just the price of the coffee. So I'm not sure exactly how they do it, but I would be hard-pressed to imagine a company like Starbucks or General Mills, that's doing a lot of grains, not using the commodities markets as a hedge. But I don't know exactly what types of coffee they buy. I don't drink coffee. I'm not a fan of coffee, really. Every now and again, I'll have a mocha, but I just can't stand the taste, and it messes my stomach up bad. So I don't touch coffee at all. So I don't know. I don't know their operations, what kind of coffee. If it's good coffee or bad, I don't know. It's all garbage to me. Let's see, got that one. Crude oil fall makes sense with the slowing economy. Andres, it's an interesting point. With the slowing economy, you would think that crude oil would fall. Just demand would start to shrink. However, we talked about this a while back when we first had Israel, or the Hamas attack on Israel. And I went, oh, man, this is really going to heat up tensions in the Middle East. And while I thought it was going to happen faster, it's taken longer to escalate. And we've seen it slowly build and slowly build and slowly build. None of us here want to see this thing escalate and get even bloodier than it already is. But, you have many countries over there that absolutely hate each other. And, you guys remember back in high school. When you're back in high school and you got those two kids from high school that absolutely hated each other. And you knew that, when they passed each other in the hall, something bad was going to happen. I feel like that's Israel and most of the Middle East. It just feels like there's this overwhelming tension, and it's just kind of been building and building and building. Of course, the U.S. is kind of getting involved and saying, hey, Israel, just calm it down a little bit. And now the riots happening here in the U.S. and protests for Palestine, etc. I think that creates stress on crude oil. Not only that, but the situation we currently have with Russia. So even though I agree with you, Andres, that the demand may slow if we see the economy slow down. That's just a simple economic fact. That should happen. However, if the supply becomes interrupted, right, if we see supply chain disruptions on crude oil around the world, then that will continue to drive the price of oil higher, even though demand declines. So remember, if we have our X of supply and demand, right, you've got your X there. What's happening with demand is, okay, if economies slow down, demand starts to shrink, starts to move down. But if supply dwindles, then all of a sudden prices surge again on that X model. So I agree with you, but remember, it's not just demand in the U.S. and economics. It's the supply side of it as well that's going to be a big factor here. And I think that's a pretty dangerous side of things for me. That's why I've been pretty bullish on crude oil. I thought we'd see a pullback. I didn't think we'd see one that was this deep. I didn't think we'd see that much. I mean, if you look at the price of crude oil from its little peak here we had on April 5th to our low we established last week, 12% slide, that's pretty significant. That's a pretty good drop in the price of crude oil. It does feel like it's base now. I'll get rid of that orange box. You feel like you've had those couple candles into the yellow there and then now starting to move up. We will see what tomorrow brings. Obviously, today was a big eraser day, which took away a lot of yesterday's gains and the day before. But as long as it stays above the bottom here, in my opinion, right, and everybody has their own levels, 76.80 is kind of the bottom of that box. If we stay above that one, then I think we'll be okay for crude oil going forward. And demand, I think, will always be there in some capacity. It's just really a question of what happens with the supply side of things. All right. Let me go into a couple of other things here. Let's go to one question came in from Marshall, and I'll go through the top 10 in here in a second. Marshall, can you talk about, no, that wasn't the one from Marshall. Hold on a second. Let me get the right question up here. There it is, from Marcus. I already did the Boeing one, which we can take a peek at as well. I haven't looked at Boeing today. I want it to drop. I want it to go lower so I can sell puts at 140. If you have time, can you give me your thoughts on Shopify for Marcus? Sure. So Shopify had their earnings. And that's Hop, not Shop. Here's Shopify. There's their earnings. You saw them come out with earnings on Wednesday after market close. They're expected to make 17 cents, came out with 20 cents. And I could see why you might be interested, Marcus, particularly because of what happened today. You had an almost 6% slide today in it, down $3.50 on the session. Do you buy here? Well, we all have different reasons as to what motivates or draws us to certain levels. Right now, I've only got one price that would appeal to me as a buy point for Shopify, and that is $57.64. That's the origin of the gap that happened on November 2nd. Now, overall, what's the picture of Starbucks telling you? It's telling me this is not a good situation. Not Starbucks, excuse me. Shopify. It's telling me it's not a good situation. Back here on February 12th of this year, Shopify was up at $91.57. And here we are now at 58. So not quite half the price, but the trend is pretty obvious. The moving averages are pointing down. We have aggressive sell-offs here. Earnings, even though they beat earnings, it's other things. It's their forecast and outlook going forward. You also have this giant unfilled gap. I will draw a yellow box in it for you viewers out at home. Not yellow now, I guess they're orange, but I will change this because I prefer to have the orange one. There's the yellow box. Okay, that's this giant unfilled gap. And I believe that if we get below 57.60 on Shopify, then that gap could very well fill. And I might be more interested in buying closer to $49. Now, $49 obviously would present a much steeper discount for Shopify. $49 would bring me down about 46% on it overall. Now, this is on the daily time frame. And I know we've got fans here of the weekly, which in this situation, I would want to look at the weekly and notice where the weekly puts us. The weekly put us right at kind of that longer term, demand zone in this uptrend that started back in October of 2022. So, I'm not very big on Shopify, but I'm not interested right now. Some of you may be at this current levels right around 57.64. That's fine. I personally don't think I want to take that chance. I feel like in this case, you're really catching a falling knife here on Shopify, and I personally would just leave that one alone. I don't. Doesn't appeal to me, and I guess I'm just a little bit more risk averse. If this was something like Starbucks, I would probably feel more confident about it. I feel Starbucks is a better business. I feel they're more entrenched. Shopify certainly did well to capitalize on a market where people were working from home and setting up their own personal businesses and trying to move on and using their services. Now a lot of people going back to work and maybe not focusing on Shopify as much. I don't think that this will look as bad as Zoom. You guys might remember Sam Evans and myself. I was on Sam Evans' show, and he said, "What are you bearish on?" And the first thing out of my mouth was Zoom. And that was back here in 2021. That thing is absolutely just fallen apart. We're seeing from the peak we had back in 2020, Zoom is now down 89.46%. Pretty significant slide there for Zoom. I'm not a buyer of Zoom either. I mentioned why I think that this is a huge mistake on their part. As soon as you present a software that is so dominant as Zoom was, Microsoft Teams now incorporates it. You've got Google and all these other services that you can do video conferencing on, and it's bundled in other applications for free. So I wouldn't buy into Zoom. Shopify, I don't think will have the same fate. I think they're a little bit better, but still. I'm not that optimistic on the long-term future for Shopify. So, sorry, Marcus, if that wasn't what you wanted to hear. These are all just opinions by myself. I'm sure. What do you guys think? I got a bunch of people here today. What do you think of Shopify? That chart I just showed you. What's your take on it? We've got a bunch of people here who trade, Marcus. So make sure you watch the chat as this goes on and see what some other people think. They may echo your sentiment. And if you're bullish or bearish, you didn't really say in your email to me. However, everybody here has different approaches. If you are bullish on it, I would love to hear why. Tell me kind of what you're interested in, why you think Shopify might be a good purchase right now. And at some point, either one of us or all of us are going to be right. All right, I don't see anybody mentioning what they think on Shopify, so I will move on to our next discussion. So for me, I'm going to go and but get close to the wrap up here, unless I get specific questions from you that you want me to discuss. Someone asked me about what was my favorite moment from the Traders Investment Master Symposium. Maybe I can answer that one here in time. Let's go into the bottom here. All right, so Les says, I see support at 47. All right, let's go down in there, and I'll put your horizontal line at 47. And there's absolutely no right or wrong answers here. Right? Trading is all about opinions. So Les is going deeper into it. There you go. There's your 47 mark. Margaret says 52.88 long. I'm wondering why 52.88, because you're in the middle of the gap, Margaret. You're right in the middle of no man's land here. If I zoom in, let me get rid of this yellow box, which represents the gap. You guys can all see the gap. But if you do 52.88, you're in the middle of no man's land. I'm just curious as to why you'd want that level long. If I'm going to buy anything like this and buy kind of pullbacks, I'm buying where there's obvious points that sellers have stepped in. In that case, it's right here at 57.64. And then I think Les is right. I was using the origin of the gap, which is 48, but 47 would be even better. You're right near the bottom end of this tail. Okay, you're going to weekly candles. Well, we'll check the weekly then, shall we? You still have on the weekly this big weekly candle. So if you're anticipating that this area right here, so let me help you out here, Margaret. If you're anticipating that this is your demand zone because of how it sold off, there's no demand here anymore. That whole box is no demand. Why? Because if this was demand in the yellow box, it already broke down below it here on October 23rd. That means that anybody that was there, their buy orders are gone. They've been liquidated. And then you had it rip right back through. So I don't see the creation of a supply or a demand zone either way, whether I'm looking at the weekly, the daily, and I might even bring up shorter term here, and maybe I see something. But because we have this gap, it erases any of the sell orders that were there from before, and maybe people start to put buy orders back in. But yeah, I don't know, 52.88, I wouldn't look to be a buyer at. But again, everybody can do what they want. John says negative 45. You're talking 45 bucks. So you're going to the very tippy, just below this tail, if I'm not mistaken, John. You're going right below these lows from October 26th, 7th, and 8th. That could be done as well, but if you're buying past the demand zone, you understand the risk there, right? If you were to put a level in here, let me just put a line at $45, and let me edit that data point out. Come on. There we go, and we'll go, you said 45. Oh, you said selling the 45 puts. Got it. So you're selling the 45 puts saying, I'd like to be a buyer if it gets to 45. Okay. Yep, I got you, John. Yeah, I'm okay with that. I would do the 46s personally because I think I would get a little bit more premium. And my one concern would be, John, if I sold the 45s, that means it's already broken that demand zone. It's already down below the lowest level there. And that might actually be a moment where it goes into deeper free fall. So I would be using the 46s just because I can still use that as a backstop. And hopefully that demand is there. I get it at 46 and it bounces up. But, I definitely think that low point would be a point where I would take a shot at Shopify. All right. Cool, good. Wait and sell some puts just below the pivot. Oh, there you go. If I could just read, right, John? Okay, let's start at the bottom here. So one of the conversations that came up, one of the guys that was presenting in San Francisco, was rather interesting. I don't even remember his name, so it couldn't have been that interesting. But he was from the Elliot Wave Institute, and it was so I had a 45-minute presentation, and for all of you who were there, you know that I went well past 45 minutes. I knew I had nobody after me, so I had the whole room to myself, and it was just a lot of fun to just go and talk. I could not finish my slides, all my materials, in 45 minutes. I finished it in about 60 minutes, and then we did 30 minutes of Q&A. It was great. This guy came in from the Elliot Wave Institute, and I swear I'll show you his exact presentation. It was fantastic. He went out here, and he brought up a Bitcoin chart, and I think he had on a weekly, and he put it on a logarithmic scale. Oh, it was on logarithmic. And then he had it over here, and he just said, okay, based off Elliott Wave projections, my price here is 88,000, then I think we pull back, and then we're going to go to 125,000. That was it. 15 minutes. He spent a good 10 minutes telling you about his newsletter and his subscription service and a little bit of experience in crypto, which he said he actually was trading all the way back in 2012, which I was like, damn, you're an OG in the crypto space. And he did seem very knowledgeable. But what I found interesting about that, I don't mean to sound like I'm slandering the guy at all. It just goes to show you that we all have different ways to look at a market. So for me, there's no way I could buy into Bitcoin without knowing the underlying technology, without looking at its prospects and the regulation and the historical patterns. This guy was like, I don't care what it is. It could be a chart of the pooping patterns of my Great Dane or my German Shepherd. And if I can put Fibonacci or Elliott Wave on top of that, I'll trade it. And I was like, that's an interesting approach. And I asked him, with your Elliott Wave, have you tried to line it up with the previous 4-year cycles that Bitcoin has or the halving? And he's like, no, I haven't. Well, yeah, maybe it kind of lines up. It was kind of surprising to me when someone a trader has blinders on to everything else except price. You may actually do really well. And I think because we have so much information bombarding us, right? I think a lot of you are bombarded with information on a daily basis with regards to trading and investing. His approach was just Elliott Wave. I'm just looking for this 1, 2, 3, 4, 5 ABC pattern. There's other math behind it, but that's it. I don't care what it is. And he was talking about buying all these meme coins like Pepe and Dog Whiff Hat, which is another Pepe, shit coin. Really interesting. It was a 15-minute presentation, and he had 45 minutes to go. So we kind of sat there and all just asked him questions. I tried not to interject much, but I couldn't resist. But it was fun. Thank you, Thomasina. You have a great weekend as well. So, yeah, that was probably the highlight for me was seeing different people's approaches. With the conference, they had a lot of natural gas exploration. There were 3 or 4 different natural gas booths that you could go and talk to, which I didn't even go near them because I don't like being sold stuff. I just look at them and go, yep, I know what you're doing. Yep, I know what you're doing, as opposed to walk up to the booth and be sold on something, which is just not my cup of tea, I'll tell you that. All right, so that was your worst performer, and he had felt that we had bottomed on Bitcoin. That felt like we had bottomed out, and we were going to start to see that next move up based off Elliott Wave. I'm not so convinced of that. I'd like to think we are. As you guys all know, I'm long Bitcoin. I'm long quite a few different cryptocurrencies. I look at what's going on right now, and we're making lower highs, we're making lower lows. This is a very, very, very clear example of a downtrend starting on March 13th. And until this proves to me that it's no longer trending down, my bias is this thing trends down. So it'd be funny if everything you predicted comes true. Yeah. I mean, Margaret, it will come true. It will come true because Bitcoin will hit $88 at some point. Bitcoin will hit $125,000 at some point. So yeah, he's going to be right. Just like I'm going to be right that Bitcoin hits $250,000. I don't know exactly when. I think it will be probably by November of next year. That's my aggressive estimate based off that 4-year cycle. But who cares, right? As long as I put my money where my mouth is, that's all that really matters. The ones that bother me, I don't know if this guy actually has money on the line. He said he did, but you never really know. It's the people that make all these calls and try to pressure people into buying and selling that don't have any skin in the game. Those are the ones that bug me. If you're going to make a call, get some skin in the game, and then I'll listen to what you have to say. All right, so I do think we're going to be drifting lower here on Bitcoin, even though we had that nice little pop last week on on Friday the 3rd. Down 3% today. We're still above 60,000, but that could break here. We did hit these lows on the 1st of May. That low price for Bitcoin is 59,100, I believe. 56,910 was the low. I still think there is a possibility of us getting down towards that 51 to 50,000 mark on Bitcoin. But the longer that this goes sideways, the better it is for Bitcoin. Just understand that. The longer this goes sideways and slightly down, the better it is for Bitcoin. What we don't want is a big impulsive sharp move where panic sets in. If this stabilizes, my hypothesis based off the historical information is that this Bitcoin will trend sideways to down. Let's see, this was March, there's April, there's May, there's June, July. I think you'll probably see something like this. Not a lot of action for the next few months. And then from that point, we start to see the big moves happen. Now, once we get towards the tail end of this year, remember my big price projection is based off the halving cycle, is based off this 4-year cycle, which tells us that in November, I'll go to November 1st of next year, which is this big vertical line right here. That's when I see this thing hitting 250,000. I know a lot of you can be like, are you insane, Merlin? 250,000 is so far up there. Well, it is. Let's go back here, and I'll put it all the way to 250,000. There's 225, there's 250, right around there. Okay, so that is what I believe is going to happen. Who knows? I might be crazy. That's a 3,400% gain in a little over a year. And I don't think that that's an impossible move. I think that is absolutely possible. Actually, it's more than that, isn't it? Depends really where we move from. So that's kind of what I think. And I think, as I mentioned, the longer this goes sideways, the better, because it just is like a coiling spring before that next big surge up. And that may coincide with the election, which is where I'm kind of hanging my big hat on. That was your worst performer, down 3%. Russell 2000 down 0.78% today. 2076 where it finally closed at. Technically, what do we got? Well, we're coming right into that same line. We had 2102 mapped out as that overhead supply. Of course, you round down to 2100 on that one. And today, our intraday high for the Russell 2000, 2096.3. So we came ever so close to that overhead supply level. We'll see if it actually holds and pushes things down next week. Crude oil, we already went through crude oil, down 1.26% today, giving back, a couple days worth of gains. And similar to Bitcoin, it's hard to be bullish on this. I am long-term bullish, and I almost feel like I'm finding excuses for it to go up, but it's making lower lows and lower highs, which is why, if we break down below this level here that I've got in the yellow box, I'm going to have to I'm going to change my tune and have to be bearish on crude oil just because it's making lower lows and lower highs. But all in all, I think that uptrend that started back in December of last year is still the powerful piece that's going to keep on pushing it higher. S&P 500. Another fantastic day. We already looked at this one. Its tail right into overhead supply. I'm a little upset I didn't pull the trigger on this one, but I just got a lot of things going on right now and couldn't really focus, and I need to be focused to do that type of stuff. So that's a shooting star as well. I will remove these couple of lines here just so we can kind of look at it from a blank screen. Monday, we get that nice market open and starts to drop down below these lows here at 52.32.75. think you got a great short potential. I will wake up early Monday for that one. Actually, Sunday night when it opens, I'll be there, but the real action doesn't happen until Monday. Fourth place finisher for the day, that's NASDAQ. Similar picture, although it did not rally up into overhead supply. It did have a topping tail on it, long topping tail here, which is obviously bearish. It was up 0.22% on the day. Dollar index, moving up slightly, but when I was in San Francisco on Thursday, you had that pretty significant drop in the value of the dollar index. Today, only up 0.11%, but technically not a lot to go on here, other than it's below its moving averages and it's making lower highs. Our 10-year, you have a 4-day, actually call it 5-day. This entire week was a net zero gain. I mean, it was almost nothing happened this week. We pretty much closed right where we opened. I can put this on a weekly time frame so you can see what that looks like. And you notice you really opened right where we closed at. So, closed right where we opened at. Nothing really to speak of there, which is a sign of indecision. And again, we'll have to wait and see which way this one breaks out. What you could do, I guess I could take this yellow box and it's no longer valid. You could do is just do something like this. All right, there's your range for the past 5 days. I am cutting off that long topping tails because there's more points of contact here. But there's your range bound. Just wait for it to break out one way or the other, and you're good to go. And finally, commodities. You saw some pretty big swings in commodities. Gold having a nice day up 1.48%, closing at 23.75 on the session. Silver as well. This is another one that just had a beautiful day yesterday. It's like, oh, just wish I would have sold more puts. I sold a lot at the 23.50. I sold 8,000 at 23.50. Not 8,000. 8,000 shares. So I have 80 puts that I sold at the 23.50. Collected some nice premium, but I'd much rather have the underlier selling calls against it. So that's my top 8 market roundup there. You guys got anything else you want to discuss? Anything else you want to throw in the mix for our final piece here? I'm going to wrap things up early and go finish my work so I can go have a nice cocktail later on. You guys are awfully quiet today. I don't see a lot of chatter. By the way, my plane ride was fine. I was surprised that the airplane, this is an interesting discussion. I need to actually look it up right here. John, who's with us today, he texted me, and this is an interesting one. We had a discussion on the show about major airline manufacturing companies in the United States. And it's like, well, you've got Boeing, and you have Airbus in France. Well, you know, that's too big to fail. Boeing's too big to fail. There's nobody else. I stand corrected. I don't know if they make the big planes that, one second, why is it? I'm going to bring up a picture. I want to make sure I get the name of the airplane. I took a picture of it simply because it is great. Now I don't have the dang picture. I took a picture of the airplane because it explained the name of the aircraft. So there was a Embraer. Ticker symbol is ERJ. Embraer. ERJ. Let's bring that chart up here. They make the plane that I was on. There you go. So here's another aircraft maker, although the RSA, which most likely means they're international. All right, we can go check that one out here real quick. Let me just bring up my YouTube. We will go to finance, and I'll do ERJ here. Yep, that was the Embraer E175. It was a nice plane. I actually enjoyed it. I thought it was nice. I'm not afraid of an airplane. I'm not afraid of Boeing. I'm not afraid of any of these guys. So I was just kind of joking when I said that the other day. Let's go ERJ and bring that one up here. I'm assuming, let's see, where are they from? I believe they're going to be Amsterdam, Holland? Because it's an SA. Where are they based out of? Doesn't say right here where they are based out of. Oh, Sao Paulo. Wow, okay. So this is a Brazil manufacturing company. Yeah, wow. Okay. So not in the U.S. Interesting. You would think there'd be more competition for airplanes in the U.S. since they're one of the biggest traveling countries in the world. Why don't we have more airline manufacturers? What are the other ones, John? Are there other airlines smaller? So I know that Embraer kind of specializes on these, short flight, short haul airplanes. Who are the other companies making airplanes out there? Since I got an expert here with me. Let's see. Lisa says, wait, for Thinkorswim users, everyone should be saving their workspaces and email themselves a link so when Schwab takes over, they get to keep them. Otherwise, you lose everything. Yeah, you got that conversion over to this weekend. Thinkorswim into Schwab. Yeah. I'm curious to see what happens from a platform perspective after that. Schwab bought my favorite trading platform of all time, and that was called CyberTrader, and they gutted it. They used it for a couple weeks. They took out features and functionality, and then they just burned the thing. They spent $600 million to buy I see $500 or $600 million back in 2020 to buy CyberTrader, and it was a great platform. Bombardier, okay. Megalith generation jets, yeah. Too many mergers, was driving, yeah, cool. Well, it was small. I wasn't ready for the small play. One thing I was so bummed yesterday, guys, on the airplane. So if you live in California, particularly Southern California, you should just Google rocket launch calendar. Just Google rocket launch calendar, and you'll see all the different launches of the SpaceX out of Vandenberg Air Force Base. It's not just SpaceX, but they're the ones that do most of them. And it's like every other week there's a launch. And it is really cool to watch those launches. And the launch was supposed to happen at 7:50 p.m. last night. I was on my airplane, supposed to arrive at 8:15 p.m. And I was like, oh, please launch a rocket as my plane is going by. I want to see that from the sky. Unfortunately, it didn't launch till much later on. But yeah, if you live in SoCal, check that out. It's a really cool spectacle to watch these rockets get launched into space and kind of how it happens. And if you are interested, go to YouTube and type in SpaceX live launch. And I had the opportunity on the flight back. I sat next to a lovely lawyer. She's a patent attorney for a rocket manufacturer that manufactures rockets here in Southern California. And we were talking about it, and I said, what I'm fascinated about this space program is, when I was a kid, you might be able to turn on the news and watch, Cape Canaveral, oh, there goes Challenger, and it took off. And that was it. SpaceX has like a whole broadcast team. I mean, I feel like I've got Howard Cosell in there with the rocket launch. I mean, they're really going through all the specifications. They're doing all the details, all the countdowns, telling you all the little details about the launch. It takes off, and as they're going, okay, here you're going to see the main engine deploy, and that's going to break off in 3, 2, 1, all mapped out. I mean, it is the most cool, transparent thing you'll see in a long time. And then to actually see the real one fly overhead as you're watching the broadcast is pretty impressive. Anyway, I'm geeking out of here. I apologize. It's because I didn't have any whiskey. See what happens when I don't have whiskey? Anyway, that's going to do it for me for today, everybody. You have really nothing to worry about from the earnings calendar for Monday. I believe you have 10-cent media reporting on Monday, which is nothing. The economic calendar for Monday is pretty quiet as well. It really all kicks into effect on Tuesday with your PPI numbers. Yeah, that's pretty much. You got Jerome Powell speaking next week as well, but there's really nothing big on the plate for the United States until Tuesday. Les says, and if you're in Brevard County, Central Florida, you can see a SpaceX launch about once a week. Nice. And it's still that you can still log into SpaceX Live on YouTube, and you get this amazing play-by-play, which I find absolutely fascinating. Even crazier is how they launch. When the rocket booster falls back into the water, NASA a lot of times let them just kind of, I missed that one. They try to recover them, but SpaceX actually just lands that thing on a boat out there. It's pretty amazing. I don't have any guests next week, Margaret. I just have not reached out to anybody. I'm not. If you guys are ever in XLTs or ever talk to somebody else and you want them on the show, just tell them, hey, email Merlin, TraderMerlin@gmail.com, and I'll bring them on the show. Within reason. I'm not going to bring on specific scumbags from Chicago, which I just can't stand. But other than that, most people are welcome here. What I don't want is someone just going to try to sell you on their service over and over and over again. I'd rather you get some information, education out of the way. But yeah, I have nobody scheduled, Margaret. Just wee old me. Little old me. Okay, everybody, that's going to do it for me. Hope you have a fantastic weekend. If there's something that you want to discuss next week, send it in over the weekend. Give me a little time to work on some stuff and graphics and supporting materials for whatever concept you want or topic you want. You can email me at TraderMerlin@gmail.com, or all of you who sent in a lot of comments on my YouTube videos. That's great as well. That's probably better for me from a help perspective to grow that channel. That said, hit that like button, subscribe if you're new, and I will see you guys on Monday. Take care, everybody.